Hello guys, and welcome to another video. So today we're going to look at Nasdaq. So for those of you that have been here for a while, you will know that on, I think it was on Sunday, last week Sunday, we did go through this one, and I told you that there's actually a chance for the price to go up, or at the same time it can also go down because of what we saw here on this time frame. I'm starting with this time frame because I want you to remember when I was pointing out at that bearish pin bar there, which pointed that we could be going for a deeper pullback. And I told you that this one, because we are looking for buying opportunities, but the lower it goes, it will give us a chance to ride it all the way to the upside. So in this one, it went all the way down, but currently it is sitting at a very critical area. So you need to make sure that you watch until the end, and I'll try to be as thorough as possible. Even if the video is going to be for a bit longer, I'll try and add something else to it. But I want you to follow every step when I'm analyzing, because I don't want us to come back on Tuesday and say, okay, this is how it played out. I want you to follow every step, right? So let's get started. I'm not going to go to the monthly chart because nothing has changed that side. So here, what I want you to see is that currently the price, as you can see, it moved from that bearish pin bar. It came down, but let's see if it's going to pass here. If it was to go down to this much bigger zone, that will be even much perfect, because of what we will be buying even lower to try and push it all the way up. But what I can tell you now is that currently where we are, there's a high chance of the price bouncing from there and going all the way up. And in terms of a trend line, it's still a bit far because it still remains here. The trend line is there. That's why I'm saying that if it was to happen, then the sellers are still angry when the market opens, and then they push the price below that, the tail of that pin bar or the tail of that red candlestick, then they will have a higher chance of coming here, and that would be perfect because they will be aligning with the trend line and with the zone that is located at the what was once all-time high, right? So but what I can tell you is that look for buying opportunities from right where we are. But if it happens that the price tips below this candlestick, it will be on its way to this zone, then that's where we'll definitely be buying from there. But let's zoom in and see if we can't find anything on the smaller time frames. So this is what we are seeing on weekly. So let's see what we have now on daily. So daily looks like this. Remember when we were doing the analysis, we were in between this area and that high, and I said to you that we are just bouncing in between this support and that all-time high, but there's a chance that we can go to the downside. The first reason why we were saying that we could go to the downside is that bearish engulfing that we saw on, the bearish pin bar that we saw on weekly, and the second one was what we were seeing here on daily, which is bearish engulfing. So those two signs, or those two structures, or those two patterns were basically saying that the bears could be coming in and push the price all the way down. And look at what the bears did when the bulls tried to push up. The bulls came to their support, and then they tried to gain momentum and push the price up. But this kind of candlesticks, they are not convincing, because you're trying to go up, but you end up with a candlestick that looks like this. So this shows that at some point someone was pushing you down and forcing you to go and close down here. You try to go up again, and then you have a nice candlestick, but they don't allow you to close like that. They force you to go down and close like this again. So there's a lot of bearish pressure that's pushing you to the downside. That's when the sellers were giving us these bearish pin bars, and then we ended up pushing all the way down. So now we are sitting at this nice zone. If I can just mark it for you to see, that's why I'm saying currently where we are, the price has a very high chance to push back up, unless of course if it pulls below this candlestick. You see, if it moves lower than this, if it moves lower than that, then it will be on its way towards that weekly support, or the weekly demand around that weekly bullish trend line that we just seen. I showed you when we were still on the weekly chart. So that's why I'm saying, with this one, we are going to look for buying opportunities at this zone, unless of course if when the market opens, it opens with a gap and then it's placed on this side. It doesn't mean that if it plays on this side, it will still just continue dropping like this. It can open on this side just to open more room to go to the downside, and then push up before continuing like that. So anywhere around here, we will try and look for signs that the price wants to go up. But if it breaks this, it will have more chance of coming to the weekly zone than to break that high. So let's zoom in again and see what we're having on the other time frames. So from daily, let's go to the H4 and see what we have this side. So on the H4, this thing has been going to the downside, has been falling and falling and falling. And then currently it is inside the H4 zone, which is this one here, right? So we have just tapped into this H4 zone that is located inside the daily one, and we do have a tiny weekly one there, if you still remember. Let me just go back to weekly and remind you, because remember I said the weekly one, there's this funny looking candlesticks, so there's a pause there. So we have got this the H4 that I was just marked now. So we have H4 area of demand or support that is located inside a daily one, and then which is also inside a weekly one. So there's a lot of pressure there. But if it happens that the price, like I said, moves lower than that low, then it might change the dynamics. But until that happens, we are leaning towards, searching for buying opportunities. But if you want to play it safe, let's say you are using H4 as your execution time frame, and you can see clearly that your H4 that you want to use to execute is definitely going to the downside. So if you want to play it safe, rather just put a trend line there and say the H4, I know the location, we are located nicely at a strong demand there or a strong support, but I can't just go in because my execution, if your execution is H4, is still pointing to the downside, is still bearish. So instead, I will just wait for the price to show me that the bulls are pushing in that zone. So they need to at least come and break this recent swing high here. So if they just go like this, they would have taken out the trend line, which means they would also take out the resistance. Then they will change the trend to being bullish on this time frame. Right? So if the trend is bullish and we are still playing around the very same bigger area of demand, then you can try and take your buy trades. But if you're not scared of that, you're just saying where we are located, I can try and get an early entry. You need to also keep in mind that you can get an early entry, but when you touch in the trend line or an area of resistance, you need to either close half or you need to move to break even, because of what? You took a buy trade, but the dynamics on this time frame are still pointing to the downside. As much as you are located nicely here, but the dynamics hasn't changed. So you need to either wait until that changes, or if you want an early entry, you're going to go to break even as soon as the price touches that trend line. But for now, yeah, we are looking towards buying. If it happens that the price bounces to this side, then we wait. We can maybe continue selling like that. But until that happens, we're not gonna lean towards selling. We were leaning towards, remember we were up there and we were saying let's look for buying trades and sell trade, but we'll be only be bouncing between this and that. But it happens that we're bouncing there, but the sellers won. And when they won, it means their next target will be the next bigger zone. And now they have arrived. We can't keep on leaning towards them, even though they have arrived at a bigger zone. So for now, leaning towards the upside, and we just hope that it will break like that and continue going up to at least the daily zone that is around there, which is this one basically. If I can just zoom in and show you what I'm talking about, which is this one. So when you're buying, you're just hoping that the price can at least get to that zone, right? So let's see if we have anything on even much smaller time frames like your H1. So on the H1, like I said, the location is nice. We are located at a strong zone, right? But the dynamics are still pointing to the downside. That's the problem. So your trend line is still intact and it's still a bearish one, and your resistance is still holding, and which is also a bearish structure. So if it happens that you're saying, okay, I'm seeing a lot of pin bars here, but that is not enough because you're having bullish ones, you're having bearish ones. So let's just wait. But if it happens that you get a buy trade, you're going to use maybe this as your TP1, or you can say the price is going to break it. Maybe let me just go to break even and hope that the price breaks it, because you can say it's going to break it and you can still continue before breaking it. You will never know. But I'm giving you the options that you have. If you manage to get a trade there, you can use this as your TP1. Or if you just were gonna be like, okay, I'm not gonna do anything because we haven't changed as yet to go to the upside, and then you're waiting for them to remove this, then you can start buying and then buy like that. And then yeah, I think everything else will still look the same. You just have to wait for the structures on your time frame to align, but you're leaning towards the upside. So that's the prediction that I have for you guys on US tech or Nasdaq or US 100. So we're gonna make another video on Tuesday and just check how it went out, how it played out. So now let's look at something else, and then maybe we can look at 2 more charts so that we have 3 items to look at or to monitor and take advantage of this week. All right, the second chart that we're going to look at is gold. So I'm trying to accommodate everyone just in case you don't trade Nasdaq. Maybe this is something that you can look at. So we're going to look at gold. So I'm going to do the same thing where I'm going to start from the top and then we work our way down until we get some nice entries on the smaller time frames, right? So it's very important that when you're doing your analysis, you don't just go and say, I'm going to look at M15 and then you start to make your decisions based on just one time frame, because sometimes you're going to miss out on a lot of information that had you just taken your time, some of your time, and just went to H1 for instance, you're going to see that the type of a trade that you wanted to see there wasn't a good move to take at the time. So which is why it's very important that before you make your decisions, make sure that you have went through different charts or different time frames before you can decide on what to do. All right, so let's get started with this one. So this is the monthly chart. It looks like this, and we can see that the most interesting area in terms of the demand or the support is this one here, right? But that's very far from the current price action, and we can see clearly that in terms of the trend, this is definitely going to the upside, and there we have the support that goes with the same trend, right? So which means if you are someone that's taking trades on monthly, the only interesting area to take your trades would be from this area of support or from this bullish trend line, because these are the only 2 structures that you can use that are on your side when the price is going up. So those are the only 2 structures that are being respected basically. So that's why when the price is going up, we are only interested in taking our buy trades from the area of support or from our area of the support is the demand, or from the trend line. So if you remember the setup that I just made now, we said that currently the price is inside a daily, a weekly H4 area of support, which is why we can't be talking about selling. The only way you can talk about selling is if the price was to take out that low, that zone. Then we can say the sellers are still in control because they keep on taking out areas of support, right? It's the same thing here. Because the trend is going up on monthly, you're only looking for buy trades if monthly is your time frame. Get that? You're not gonna go to the H1 and say you just keep on buying because the monthly says we're going up. No, we're saying if you're someone that's trading here, the trend is going up and there is your support and there is your bullish trend line that you can use to add more trades. But another interesting thing that we're seeing here is happening here at the top, which is, look at the type of candlesticks that we're having there. I would say for the past 3 months, 4 months or so, we haven't made any progress because we're just here. We're just here. When you compare it to this and that, you can see there we were moving. This is when the price is moving, right? But there at the top, we are no longer going anywhere. We are no longer going anywhere. So the candlestick was trying to go up, but then it's forced to come and close looking like this. The next one comes in, tries to go up, it's forced to come back looking like this. The next one tries to go up, but it's forced to come back close like this. This is another one that's most likely gonna close the same way. What is this telling you? So it says that the sellers here, they are trying to fight and so that we go for a pullback because of what? These are the sellers. It can only be the sellers that are pushing the price down, leaving a long tail above. This is the price push. The sellers pushing the price down, leaving the long tail above. So which means there's a lot of sellers pressure there. Selling pressure is a lot. The sellers are fighting. So which is why it's very likely that towards the end of the year, this thing might be playing maybe down there, approaching this trend line or this zone, because of what? For the past 4 months, it hasn't been going anywhere. So maybe the pullback would do for it before it can take off again. So that's all that we can take from this. It is still bullish. The trend line, the bullish trend line and the support, they're still quite far from the current price action. But what is happening around the current price action is that we are seeing a lot of bearish pin bars, which is something that's telling us that on this larger scale, the sellers are fighting. They want to push the price to go for a pullback. So that's all that you can take from this time frame. Now this is another time frame. This is our weekly chart. The weekly chart looks something like this, and we can see clearly that this looks like Adidas. So it's like this. So the first high is lower than the second one, and then the third one like this. So this is a smaller one, a bit bigger than that one, and then the third one looks like that. I'm sure you can see what I'm talking about, that the highs are not on the same level. This smaller, and then this is a bit bigger, this above it, right? So which means that if you want, you could put your trend line there and say that currently the price on weekly is still bullish, right? And the bullish trend line, we're gonna keep it there. And then the bullish zone, which is the support, we can keep it there, our support or our demand. So which means that if you're someone that's trading on weekly, your eyes are around those two structures, the support or the demand or the trend line, right? But again, keep in mind that the weekly is pointing towards the downside, maybe not with the trending market, but just a pullback. So the same amount of pressure that we were seeing that side, I think it's also appearing here. Why am I saying that? Number one, let's just go with it like this. Number one, the price is not going anywhere. It's just doing this, playing around the same level. That's a sign that the bulls are running out of steam, right? Number two, the current weekly candlestick that we are at is closed like this, which is what? A bearish pin bar, which means the bears pushed it all the way down. So when the market closed, there was a lot of bearish pressure. So which means I wouldn't be surprised if this goes down towards the trend line or towards the support. So that's what we are seeing here, to say that this weekly chart suggests that the price could also be going for a deeper pullback, at least towards the area of support or the demand or the trend line, if it wants to continue with the trend. Or it could even be a deeper pullback towards this zone, which is also going to be around the monthly one that we saw, anywhere around there. Remember, these time frames have to link. You have to try and link them together. So that's all that we can take from the weekly chart. So let's see what we have on daily. So our daily chart looks like this. This is interesting. So with the daily chart, I want you to pay attention here. So let's try and bring a trend line so that you can see what I'm talking about. So this is our trend line, right? And we can see that currently we are at a trend line. Currently, the trend is still bullish, even though for 2-3 days we have been pushing to the downside. I know we have pushed to the downside like this for 3 days, but during that same movement where we pushed to the downside, we did not accomplish anything. We did not break any bullish structure. So that's why I'm saying the bulls are still holding, because if the bears want to take power from the bulls, they have to break the bullish structures. If the price is bullish, for us to go bearish, we have to break a bullish trend line. We have to break bullish zone, which is a support. Until we do that, we are just going, it's just a pullback. It's just a pullback, because we know that when we are bullish, we don't always go like this. The price will move like this. So if you don't break anything, then it means that your movement is just something like this, which didn't accomplish anything. It was just there for the bulls to recover and then continue again, right? Unless, of course, when you do this, you go deeper and break a trend line or break the support, then we can say the trend is changing. But until that happens, you are just giving us a pullback. But on this one, right, the price is inside a zone. I want you to pay attention here, which is the same thing that we saw on Nasdaq. So this is the zone that I'm talking about. So currently, the price is inside an area of support and is touching a bullish trend line. But also keeping in mind that the time frame that we looked at, which is the weekly, closed with a very, very, very dangerous dangerous bearish pin bar, which means that there's a room for this price to continue like this. And another thing on this time frame that suggests that we could also be going beyond this trend line is the type of candlestick that we are having at this zone. So when you have a zone, when you are marking a zone, so this is something that those that I once mentored, they know. When you're having a zone, just because it's a bullish zone does not mean that it's a strong zone. The zones, there are those that are weak, there are those that are strong, there are those that we're not even going to consider because of what? You have to analyze them. You have to try and assess and see how strong your zone is. So this one is a horrible zone, even though it aligns perfectly with the trend line, but it's not something that if HY, I mean daily was my execution time frame, I would take it. I wouldn't, because the zone is formed by, look at the candlestick that we are having there, the red candlestick. It's a pin bar. So usually when the zone is formed by a pin bar, the price tends to break it and go for the next zone. So that's why I'm saying there's a lot of, even on this time frame, even though we are touching the trend line and we are inside a zone, but there's still a lot of bearish pressure because the zone is not the strongest because of the type of candlestick that's forming the zone. And also, let's see. Yes, I think that's the reason why we're having here. And also because of what, when you're trying to link it back to what we saw on weekly, it still suggests that there's still some room to push to the downside. Then if the price happens that it, let's say on Monday, your candlestick looks like this, right? On Monday, your candlestick looks like this. Then this will validate this guy as a zone. Why? Because that guy would have pushed the price all the way down, taking out the trend line or the zone. Then that's how it becomes a zone. So when it becomes a zone, it means we can mark him like this. Just in case the price goes for a pullback, we are definitely going to be selling towards the downside, or the price can just go and stay here with one candlestick and then continue. Then when it comes back, we can take it from there. We don't have to wait for the main zone. So depending on how the price plays out here, we will try and add trades to go to the downside if this guy is removed, because of what we are trying to also trade in the direction of what the other bigger time frames are saying, your weekly and your monthly. So we still have some space to push to the downside. All right, I think daily we can end it there. Let's check H4, right? And see if we can have any opportunity to enter on this one. So this is our H4, all right? So H4, we can see clearly that it's definitely going to the downside. Why am I saying that? It's because when we were going to the upside on H4, our trend line was somewhere around there. We could put it there and say that was our trend line, and definitely it has been taken out, and a couple of areas of support were also removed. So our H4 is definitely going to the downside. So if it happens that the current daily trend line and this daily zone that we have there, and said it's not the strongest, just because it's not the strongest does not mean it cannot cause the price to go up. We're just saying it's not the strongest. So if it happens that the price goes up there, then this will give you a chance to take a sell from there. But for now, I wouldn't advise you to try and buy with that. Maybe if the price plays around there, then we can try and sell towards the downside, or the safest would be to take there, unless of course if you're trading smaller time frames like M15, maybe you can get some nice trades there. But if you are someone that executes on H4, you will need to be careful with that one. Yes, there's a chance that this support can hold because of what, it's still a support, and the trend line on daily is still holding. So maybe a pullback because of what, of how strong this thing was to the downside. And you know that when the trend is aggressive like this, even a pullback can be a bit aggressive. So let's check what we have on H1, right? Because there are those that maybe they trade on H1. Still the same thing. We are still inside the same zone, and then the nearest resistance is up there. And then I would say be careful if you're trying to buy. Maybe if this was to take out that, then you can continue like that, because currently if you're trying to buy, there's nothing to back up your decision. So maybe let's do M15. Maybe it will give you a bearish trend line. Unfortunately there isn't. Maybe if you put it there and say the bearish trend line is there, so if you wait for the trend line to be removed and maybe this as well, then you can buy like that if you want to buy. But if these guys drop and then take out this, we will definitely be going down towards this guy. Remember, towards this, we'll definitely be going down towards that. All right, I think even gold, we can end it there. For those that trade gold, that's something that you can look at. So let me try and find something else that we can add, then we can end this video. I think 3 charts should be enough. So so that we can be able to follow up on Tuesday and see how they play out. All right, lastly, we are going to do VIX75. So this one, the last time when we made the video, the price was still somewhere, I think around here, around there, yes, somewhere around there. And I told you that this is the level where we are going to start to see some reactions. If you can watch the previous video where we were analyzing this one, I haven't moved it. The 11,000, I mean 117,390, I haven't moved it. I said this is the level where the price, even though it was still up there, I told you that it will keep on pushing down like that, at least until there. Then that's where we can start to see some real pullback. This is where we can see the pullbacks going up all the way down like that. Something that's going to take a very long time, a long time, more than a year to go back there, right? The reason why I said this level has a chance of causing a bigger pullback is because of what we were seeing here. I said that if you look at the monthly chart, this is where everything started. You can see there's a pause there. There's a red candlestick before the takeoff. So we are back at the same red candlestick. So there's a chance that we will go to at least there, or at least towards the trend line, and then play around the trend line, maybe take it out before taking off. But the thing that you need to look at now is that currently we have touched that horizontal line that I said that the price is going to get there, and then when it gets there, we're going to see the bulls coming in to try and push up. So let's try and see if we can get trades, because now we see that the price has really gotten to that zone that I was telling you about. So if you've been following this channel, you will know I was talking about this horizontal line. And if you haven't subscribed, please do so that whenever I make new uploads, you'll be able to follow up on these setups, and then also don't miss the trades or the setups when I make new uploads. All right, so we're not going to start with the highest time frames. We know where we are. So weekly, we won't see a lot of things happening there. So we're still the same. The weekly is still very much bearish, with the resistance being here, right? But we are saying currently where we are touching, it's a zone where it has to try and push the price to at least today. So now it's only a matter of saying, how do we then find an entry? All right, so this is the daily chart. The daily chart looks more or less the same as weekly. It's very bearish, but now currently the candlesticks that we are seeing, you can see that they're saying, okay, the bulls seems like they are coming in. Why? Because we are seeing those pin bars. Remember a pin bar, I told you how it forms and what it means. For those of you who don't know how a pin bar looks like, a pin bar is a candlestick that has a very long tail, right? So we can have three types. We can have 1, 2, 3. It's only a matter of saying, where is the body located? So you can have a pin bar that has a long tail and the body is located here. You can have a pin bar that has a long tail and the body is located there. You can have a pin bar that has a long tail and the body is located here. So all these candlesticks are referred to as rejection candlesticks or pin bars, but the message that they are sending is not the same, meaning that one is saying you can use me if you want to buy, the other one says you can use me if you want to sell, the other one says just wait, I'm not picking a side, right? So which means if the price forms the pin bar that says the bulls are pushing very strongly, you can't use that to take a sell trade. For example, the first one, I will start with the first rejection candlestick. The way this one was formed was that the price was going up nicely, but before this candlestick closed, the sellers became very aggressive and caused it to go all the way down and close right closer to next to where it started. So which means the sellers are the ones that are very strong here. Because of what they pushed before the market closed, they pushed and left a very long tail above. So because the sellers are the ones that are strong, which means this is the one that you can use when you are trying to sell trades. That's why we are calling it a bearish pin bar, because it's suggesting that there's a lot of bearish force, a lot of bearish pressure here when we see this type of a candlestick. Now with the second one is just the opposite, because this candlestick was going to the downside nicely, but before it closed, the bulls forced it to go up and close closer to or next to where it started. That's why we have a long tail below. So this one suggests that the bulls or the buyers are the ones that are pushing strongly. So you can only use it to take buy trades, or you can, that's why it's referred to as the bullish pin bar, right? Which is what we are seeing somewhere there. But this looks like the body is in the middle. That's another story, which is number 3. This one says that it could be going in one direction for a moment, and then the sellers push it down in one direction. Then before it closes, the bulls push it down to end there. But this one just means that they're both pushing at the same time. They're trying to push up, the other one is trying to push down. That's why the body is located in the middle. So that's not the one you can use to decide on who is winning, right? But it could suggest that if we were in one direction, we were going in a certain trend, and then we start seeing this type of a candlestick, it means that the trend could be coming to an end, because when you are in one trend, we're only seeing candlesticks that are pointing to the downside. When all of a sudden there's one that suggests that at some point the bulls were pushing, this could mean that the trend is no longer strong. Maybe we will start to see the price going up. So that's the pin bar. That's the logic or the story about the rejection candlesticks. You need to understand how it was formed for you to know which direction to lean when you're seeing this type of a candlestick, because you can't use a bullish pin bar to take a sell trade, whereas the bullish pin bar is saying to you that the bulls are pushing, but you want to take a sell trade. It does not make sense. All right, so let's zoom in here. Let's zoom in here and see what type of candlesticks we are having. All right, so this is the daily chart. So the daily chart, look at this. The daily chart was in a very, very, very nice downtrend. You can see it's been going down, like down, down, down. Even though in between you have the pullbacks, like I said, this is a healthy trend. A healthy trend is the one that looks like this. This one is very dangerous, because it will be moving in your direction and you are happy, but the pullback is going to be as aggressive as the impulse move that you were having. So this one, where you are having a price doing this, even when there's a pullback, it's going to be a reasonable one. You'll be able to spot it. So now this is what we are having on daily. Daily has touched that 117,390 that I marked on Tuesday, I think. For those that have watched the previous video, if you haven't watched it, make sure that you start with that one, so that you can see the prediction that we had there. The price was still somewhere up there, and I said the space is still decent, but we're gonna get there, because that's where the price will try and reset, and we are here now. And for the past 2 days, this one is also gonna close soon. This is the candlesticks that we are having. We were having the ones going to the downside. Now all of a sudden we are having this, which is pin bars, where the bodies seem like to be around the middle. So which is where the ones that are saying the bulls are also trying to win this battle, and I can guarantee you now they have a higher chance of winning it more than the bears, because of what we have reached the floor. I was explaining in the previous video where the guy asked me to explain the how to use the time frame combination together with the support and resistance. And I was explaining the idea of support being the floor. So that's what is happening here. We have touched the floor, so we have a higher chance on this time frame to go towards that resistance, as much as the trend is still going to the downside. But this floor that we are sitting on currently is very strong. Like, it's very, very strong. So there's a chance that will go to that resistance. So when the price gets there, you can't just assume that it's going to take out that resistance. Yes, there's a higher chance that it will take it out, because the floor that we're coming from is the floor that belongs to the monthly, and this is the daily chart. But it's very possible that the price would just go up. When it gets there, it can stall there, it can pull back before taking it out. The point I'm trying to make is that these are the obstacles that you cannot ignore. As much as you're excited that the price could be going for a long-term bullish trend, but you cannot ignore these obstacles, because they can take you out on break even. They can cause the price to stay there before taking off, or sometimes, yes, the price can break it out, but you cannot ignore this, like it does not exist. So I need to take note of that. So let's see what we're having on H4. I think I've explained enough there. So it's the same thing that happened here. If you're on H4 and the price was touched there, and then we can see the price. Okay, this is interesting. I want you to pay attention now. All right, so you can maybe put your bearish trend line there, using this as your point 1 and this as your point 2. That's your bearish trend line. Or let me just draw a real trend line so that we can, I hope you'll be able to follow me here. All right, so this is your bearish trend line, and the price touched our our 117,390, touched it there, and then what happened after that? The price reversed, and when it reversed, it gave us this. What do you call this? Because I always talk about this, I always mention this on this channel. This pattern here, it's very strong. This pattern is what you call a bullish engulfing, which basically means that a bullish candlestick, we were in a bearish trend, and then a bullish candlestick came and swallowed those bearish candlesticks, or one bearish candlestick. That's a bullish engulfing pattern. So when that happened, it suggested that the bulls are kicking in, and we can see clearly that they even managed to take out the trend line. We went and played outside the trend line. But another interesting thing happened here, because like I said, just because you are touching that strong resistance does not mean that you should just do that. You can't ignore the obstacles along the way, which this is the first one on this time frame. Remember, I marked the one on daily. So on H4, this is the first obstacle that you had. If you were getting your trades, you cannot ignore this guy. You cannot ignore this guy. This is the first obstacle that you're going to have. And you can see the price just went into it and then came back. But the bears are doing what? They're failing to give us a new low. And that's a sign of weakness. Why am I saying that? Because when you are going to the downside, they need to be giving us lower lows, lower highs, lower lows, lower highs. The moment you do this and then you come and play here and then you allow the bulls to take over, you can see you are no longer as strong because of what? You are failing to give us a lower low. And worst part is that during this movement here, just before you failed to give us a lower low, you allowed the bulls to take out one of your structures, the trend line. They were playing on the other side. Keep that in mind. So which means now we are just bouncing in between this and that. So if you're looking for trades, you can't look past these guys. We're just bouncing in between that. But this one has a higher chance of being removed than this one. Why? Because of where we are located. We are at the floor. We have touched the floor. Yes, the price might go deeper into the floor, maybe come and play there, but currently there's a higher chance that this one will be taken out than the one at the bottom. And you can see that when we came back from that, we came back to this, because like I'm saying, we're bouncing in between this. We went there, bounced, came here, bounced, and we can see that we were having the pin bar, and the pin bar pushed the price up. Now it's only a matter of saying, how's the price going to react there, right? Is it going to give us a chance to come back? Then we just do this the whole day. Or is it going to stay there, maybe take it out? Because if it does, then it's going to open a room for us to go all the way up. So here we are leaning to the upside. I'm sure there's no one who can follow what I'm saying with regards to this one, or what I've been saying for the whole week. Because when we started with the analysis, we're still up there, and I did say that there's still some room to push to the downside, at least until this. But this is the floor. This is where we are most likely going to see the price resetting and then going up on a very long term, a bullish trend. Maybe stay there, but this is the direction that we are taking. This is the direction that you are taking, right? So on these smaller time frames, we can see that on H4, for now we are just in between this and that. But this has a higher chance of being removed because of what? There's a lot of odds against it now. So let's see H1, which is most likely going to look the same as this guy. But it looks much better and nicer than H4 because of what? You must pay attention. You must pay attention. Let's remove this. Let's remove that. And then we're going to draw it afresh. So on H1, this is what we are having. Maybe we can put the trend line like this and say the H1 was going to the downside. The trend line was there. And the areas of resistance, when we were still going to the downside, we had one here. We had another one there. Right? And then immediately we touched this guy. What happened? The price pushed up. And when it pushed up, the momentum was so strong such that the resistance was removed, the trend line was removed, and the second resistance was removed. And who removed all of that? It is this guy here. This is the guy that removed. Oh shucks, I removed my trend line. I mean the horizontal line, but it's fine. I can just keep it there. I wanted to say this is the zone that removed all those structures. And remember, when I was the guy that asked the question in the previous video that I made, he was asking about the support, and I did say that the support, you'll find it at the swing low and at the pause during a strong move to the upside. So this is the swing low, right? We have a support there. So the support or the demand at this swing low is the one that pushed the price up and broke this trend line and broke this resistance and broke this resistance. So this support is very strong. You can see that immediately the price did that, it came back and then it tapped into the very same support we are saying is very strong. And what did it do? It caused the reaction. Was there a sign that the reaction was coming? Yes. Look what happened when the price got there. It stayed there with the bearish pin bar but didn't do anything. Then we had a bullish one, then the price took off. So that's why I'm saying currently we're just bouncing in between that on H4 and this. So, but this has a high chance of being taken out. So what do you need to do on this one? Lean towards the buyers and just wait for the structures of the sellers to be taken out, and then you keep on taking trades to the upside. So you're just taking trades to the upside. All right, I think I can end it there. So if you have watched until this video, this point, please just leave a comment and tell me what other chart you'd like for me to cover, or what other price action concept you'd like for me maybe to go over. Or maybe there's something that I keep on mentioning in my videos that you don't understand properly. You can just say it in the comment section and then I'll just try and make a video on that. But otherwise, make sure that you're subscribed. And if you enjoy this type of content, make sure that you like, you share, you comment, and also tell your friends who are also in the same industry trying to learn, just to come this side and get the free information. Don't keep the information to yourself. Try and share with others. All right, so I'll see you in the next one on Tuesday. Thank you.